Hey, rich friends, it's your girl Cha reporting live from the Money Mantra, and we are back with another Forex education video. The purpose of this channel is to help as many of you guys as possible become independent and profitable traders. I really want you to take advantage of this Forex education and ultimately take advantage of the Forex market because it is very simple once you get it. It's like once you get it, you can't unget it. And I just love that. So if you are new to the channel, welcome. I really hope that this first video for you is helpful and that you choose to explore more. And if you are returning, we will be doing an infamous trade breakdown where I review my wins and losses for the week. So in today's quick video, I'm going to be going over this GBPUSD trade that I dropped in the chat for the students that I am mentoring. If you are looking for a mentor and you need an accountability partner, or you want a structured learning environment with a community of other traders, I did launch the Money Mantra e-learning platform where you can learn from me directly, and the information is down below in the description box. So I dropped this trade on January 16th, 2024, and it was recommended for a sell. So this was the actual trade idea. It was for a sell at market execution or a sell stop, which is a type of pending order. I gave a stop loss of about 40 pips, which is my standard, but I really want my students to get in the habit of really looking at the chart, looking at those previous areas of resistance and supply zones, and figuring out their own stop loss. But my usual is to drop 40 pips, so that's what I put here. Then I also had three TPs, of course, up to 80 pips. Now, I know this may seem small considering that some of these markets do go hundreds of pips and even thousands of pips, but the point of my course and the style of my mentorship is to always make sure that we are securing profits along the way. And if you can have the patience to sit through 40 pips and work your way up to 80 pips, then eventually you will have the patience to sit through it and get to 1,000 pip trades. And you're always welcome to reassess the trade or stay in longer, move your stop loss to entry, or any trade management things that you do to make sure that you are maximizing as much profit as possible. But this was the recommended trade idea. And I always put this little note here. Please do your own analysis and use proper risk management. If you do market execution, please adjust your TP and stop loss to your actual entry. So dropping these trade ideas are just a part of my learn and earn system. I really want to make sure that my students, while they are learning, because most people are beginners, that they still are making money along the way. So I do drop a few trades throughout the week, and I do keep everyone updated on the status of those trades. Then once the trades play out, we come to YouTube and we do a trade breakdown video like such. So I did go back to my entry candle, which is where I entered the market. And I'm going to be explaining why I decided to take this trade for a sell. And then I'm also going to see how this trade actually played out. So when I first came into the market, I looked at the chart on a weekly, which is something that I will tend to do. I just want to see what the overall trend of the market is. So I noticed that the market was in a supply zone, and we're just going to highlight that here, and we're going to turn this red. A supply zone is an area in the market where price will hit that area, and then it will sell and it'll be a lot of rejection in that area. So I saw that it happened here, right? Price was in this area and then it sold. I can also see that it happened again here. Price pushed up into this area, our red box, our supply zone, and it sold. Here, when price pushed into this area, it bought. Here, pushed into the area, it sold. So we have three examples of when price hit this area and sold. And because the market works on patterns, if it's done that before, it probably will do the same thing again. So that was the first thing I noticed, that it was pushing closer and closer to this supply zone. So I said, okay, I might get in for a sell. The second thing I noticed was that the candles were starting to consolidate at the EMA. This purple line is EMA and this blue line is also an EMA. They're just moving averages and they let us know the trend of the market. And I'll just zoom out so that you guys can see. Let me take it to a smaller time frame for a second. You'll notice that when the candles are falling above the EMAs, the market tends to go up. I say they use the EMAs like a trampoline. And then you'll notice when the market is below the EMAs, it tends to use the EMAs as an area of resistance and it will sell. So I saw my candles in the supply zone, which is the red area I have highlighted. I also saw that my candles were forming under my EMA. So that was 2 signs for a sell. Now, these 2 indicators down here, this is my momentum indicator and this is my stochastic. Now, when it comes to the stochastic, and again, I'll just use the past to demonstrate, you'll notice that when the market is in a downtrend, the momentum will be going down and the stochastic will also be going down. When the market is going up, right? We have 2 examples of the market going up. And in both of those examples, the stochastic is facing up and the momentum is also facing up. So I like to use these indicators because visually they're straightforward. You can use indicators that are similar to this. You can use completely different indicators, but as long as you understand what the market is trying to tell you. So I had my first confirmation, I had my second confirmation here. My third confirmation was here. My stochastic was starting to face down. If these numbers were below 80, that would be better because the market would officially be out of this overbought zone. When the market is overbought, eventually it will sell. I'll probably make another video on that. But yeah, those were the confirmations that I had in the supply zone, closing under the 200 EMA, which is the big one. I didn't have any confirmation here because it was facing up, and I did have this facing down. So I always say 3 confirmations are good, 4 confirmations are great, and 5 confirmations are fantastic. So I decided to take this trade for a sell. And I'm gonna have to go to a smaller time frame. I decided to take this trade for a sell. And here was my profit and loss box. This is called a short position tool, which you can find here. You use short position when you're entering the trade for a sell, and you use long position when you're entering the trade for a buy. So my short position tool lets me know that this red area will be where my trade is out of profit, and this green area would be where my trade is in profit. So let's just go ahead and hit play and see what happened. Oh, and the gray line is my entry. So we see, okay, we see my trade was triggered. And then we see it immediately hit stop loss on the very next candle. So this trade was not profitable. Money was lost in this trade. And we're actually going to go to that candle and we're going to understand why, because that is the point of these trade breakdowns. Let's understand why. So I had all the confirmations I needed. This was my entry candle back here. But now that we've zoomed in on a smaller time frame and now zooming even closer, we can see how the market was actually consolidating. And then we can also see that the breakout candle, this green candle that actually caused the trade to hit stop loss, it happened at 2 a.m. on January 17th, January 17th, 2024. Now, I just want to show you guys something. I do have a video called Trading the News, which is how to understand how the news can impact your trades. And this is exactly what happened here. So I went back to the news site and I can see that at 2 a.m. on January 17th, which is when that green candle was formed, we had a red folder, which was high impact news. and it was the GBP CPI report. And this website is forexfactory.com. It's pretty simple. I'll tag the other video. Now, look what it says here. The usual effect is that if actual is greater than forecast, then that is good for currency. If the actual is greater than forecast, then that is good for currency. So I actually did check the news and I saw that the forecast previously was 4.3%. The actual was 3.9. The previous forecast was 4.7. The actual was 4.6. Now, October 18th, it was positive, but September 20th, it was negative. So I saw that it was more often the actual was less than forecast. So that's why I also decided to go for a sell. But as we can see, the actual, which is 4.0, was greater than the forecast, which is 3.8. And actual greater than forecast is good for currency, which means instead of the market continuing to sell based on the previous confirmations, people were really supporting this currency. Hence is why price went up. So if you do want to learn more about how to read the news and apply that to your trading, again, I did tag the video. It's called Trading the News, forexfactory.com. But that's really all I have for you guys today. It does look like this trade is going to continue to go up. You can reassess it and enter if it makes sense to you. But if you thought this video was helpful, leave me a comment below, share it with another trader, and don't just watch. Please subscribe, right? Because you're going to want to come back. You're going to want to learn more. And I promise you, once you start to apply these principles, you will see results in your trading and you will be more profitable. But that's all I have for you guys today. Until next time.